Hi, I'm Kep Kepner CPA here in Dallas. Are you one of those folks that feels trapped by your IRA? Well, all you have to do is just do a little research and you'll hear all about self-directed IRAs. And a self-directed IRA lets you buy real estate, lets you buy gold coins, lets you invest in non-publicly traded assets like a closely held corporation, and you get to use your pre-tax dollars in your IRA to make these investments. Normally there are companies out there that will act as your trustee, but there's a difference this year. On the Form 5498, the IRS is now requiring trustees to identify the amount of dollars in this IRA that are invested in non-publicly traded assets. So, if you have an IRA that has $100,000 in it, and you go buy a rental house for $80,000, and maybe you put your sister in it, oh, wait a minute, that's a prohibited transaction. So the IRS can look at your dollars in your IRA, how many of those dollars are in non-publicly traded investments, and they can start looking at whether there are any prohibited transactions and start looking for, what would you think, an audit red flag. So those of you who have self-directed IRAs, it's really important that you understand the rules. There's nothing wrong with investing in gold coins, for example. There's nothing wrong in investing in a privately owned company. Well, unless maybe it's your own company, that's not allowed. So there are prohibited transactions, even though in a self-directed IRA, you're putting money into something other than publicly traded investments. So you could have an IRA with some real estate, some mutual funds, some gold coins, and your report from your trustee to Uncle Sam is going to say that in your IRA, out of maybe $250,000, 240 of it is in private investments. You may get a knock on the door from Uncle Sam because that's a red flag. And if you don't have your ducks in a row and can identify that those purchases were not purchases that were prohibited, then what happens? Well, number one, they could say that you basically had withdrawn that money from your IRA. When you withdraw, if you're under age 59 and a half, you're going to have a 10% penalty. And it's going to add to your tax return in the year that you made the purchase, or maybe the year of audit. We'll have to see which. So all of a sudden, instead of making and paying tax 2 years ago on $50,000, all of a sudden it goes up to $250,000. A $20,000 penalty for early withdrawal, a higher tax rate because now your income went from 50 to 250, and oh, by the way, you're going to get penalized now for at least 2 years of penalties for underpaying your tax. So when somebody uses a self-directed IRA, it's a legal instrument. There is no doubt that you can do it. But you've got to be very careful to have your ducks all lined up. And if you haven't done that, I'd advise you to go do that now, because the fact of the matter is the penalties can be really great if the IRS sees that red flag waving in front of them and they find that you've made unauthorized or illegal transactions in your self-directed IRA. If you need help in this area, give us a call because we can help you. Thanks.